Ever been denied that dream apartment because of your credit score? Don't worry, it happens to the best of us. But what if I told you there are simple ways to boost your score quickly? This video will reveal the top 10 secrets to skyrocket your credit score and unlock a world of financial opportunities. Stay tuned. Number 1. Pay all your bills on time. Paying all your bills on time is the cornerstone of good credit health. Every payment you make, or miss, is reported to credit bureaus, and payment history is the most significant factor in credit score calculations, accounting for about 35% of your score. Late payments can stay on your credit report for up to 7 years. Therefore, setting up reminders or automatic payments can be a lifesaver for maintaining punctuality. Even if you're facing financial difficulties, making minimum payments is better than missing a payment entirely. Consistency in timely payments demonstrates to lenders that you're a reliable borrower, which can gradually improve your creditworthiness and potentially lead to better loan terms and interest rates in the future. Number 2. Get a secured credit card. Securing a secured credit card is a strategic move for those looking to establish or rebuild their credit. Unlike standard credit cards, secured cards require a cash deposit that serves as collateral and typically sets the credit limit. This deposit minimizes the risk for the issuer, making it easier for individuals with poor or no credit history to get approved. By using the card for small purchases and paying the balance in full each month, you can demonstrate financial responsibility. Over time, this responsible usage is reported to the credit bureaus, contributing positively to your credit score. Moreover, some issuers may offer the option to upgrade to an unsecured card after a period of consistent on-time payments, which can further enhance your credit profile. Number 3. Pay credit card balances strategically. Paying credit card balances strategically is a savvy approach to boosting your credit score. Credit utilization, how much of your available credit you're using, is a key factor in credit scoring models, typically second only to payment history. It's recommended to keep your credit utilization below 30% of your limits. To achieve this, you can make payments more than once a month to ensure the balance reported to the credit bureaus is low. Additionally, spreading your charges across multiple cards or paying off purchases immediately can also help manage your utilization. By keeping your balances low relative to your credit limits, you signal to potential lenders that you're a responsible user of credit, which can positively impact your credit score. Number 4. Ask for higher credit limits. Requesting higher credit limits can be an effective way to improve your credit score, provided you don't increase your spending. A higher credit limit can reduce your overall credit utilization ratio, which is the amount of credit you're using compared to the amount available to you. It's a significant factor in credit scoring, accounting for about 30% of your FICO score. When you have more credit available but maintain or reduce your spending, your utilization ratio decreases, which can positively affect your credit score. However, it's important to note that asking for a higher limit might lead to a hard inquiry on your credit report, which can temporarily lower your score. Therefore, it's best to request an increase only if you're confident in your ability to manage credit wisely. Number 5. Become an authorized user. Becoming an authorized user on someone else's credit card account can be a quick route to a better credit score, especially if the primary cardholder has a strong payment history and keeps balances low. When you're added as an authorized user, the account's credit history is often added to your credit report. This can be particularly beneficial if the account is older with a solid track record, as it can increase the average age of your accounts and add a positive payment history to your report. However, it's crucial to ensure that the primary cardholder maintains good credit habits. Otherwise, any negative activity could also reflect on your credit score. Number 6. Dispute credit report errors. Disputing any inaccuracies on your credit report is a critical step in maintaining a healthy credit score. Credit reports can sometimes contain errors, such as incorrect account information or fraudulent activity, which can negatively impact your score. By law, you have the right to dispute these errors with the credit bureaus, who are then required to investigate and correct any verified mistakes. This process can result in the removal of erroneous negative marks, which can subsequently lead to an improvement in your credit score. It's advisable to regularly review your credit reports from all 3 major credit bureaus, Equifax, Experian, and TransUnion, to ensure all listed information is accurate and up to date. Number 7. Deal with collections accounts. Addressing collections accounts is a vital step in repairing your credit score. Collections can significantly drag down your score, as they indicate to creditors that you've had trouble paying off debts in the past. If you have collections on your report, it's important to deal with them promptly. You can either pay off the debt in full or negotiate with the creditor for a settlement, which may be less than the full amount owed. In some cases, you can also negotiate to have the collection removed from your credit report in exchange for payment, a strategy known as pay for delete. While not all creditors will agree to this, it doesn't hurt to ask. Successfully addressing collections accounts can stop them from further harming your score and start you on the path to recovery. Number 8. Use credit for rent and utility payments. Utilizing credit for rent and utility payments can be a strategic method to enhance your credit score. Some credit reporting services allow for the inclusion of rent and utility payment history in your credit report. This can be particularly beneficial for those with limited credit history, as consistent, on-time payments can demonstrate financial responsibility. It's important to use a service that reports to all 3 major credit bureaus to maximize the impact. While this strategy won't repair a poor credit history overnight, it adds positive information to your credit report, which can improve your credit score over time. Always ensure that the service provider is reputable and that the fees associated with the reporting service are reasonable and worth the potential credit benefits. Number 9. Add to your credit mix. Diversifying your credit mix can positively influence your credit score, as it shows lenders your ability to manage different types of credit responsibly. A healthy credit mix might include a combination of revolving credit, like credit cards, and installment loans, such as auto loans, mortgages, or student loans. While it's not advisable to take on unnecessary debt, having a variety of credit accounts can be beneficial if they are managed well. This variety contributes to your credit score by demonstrating your financial reliability across different credit scenarios. However, it's important to only borrow what you can afford to repay and to maintain a history of on-time payments, as these factors have a more significant impact on your credit score than the mix of credit alone. Number 10. Keep old accounts open. Keeping old accounts open can have a beneficial impact on your credit score. The length of your credit history contributes to your score, with longer credit histories generally being viewed more favorably. It demonstrates to lenders that you have a longer track record of managing credit. Closing old accounts, especially those with a positive history of on-time payments, can shorten your average credit history and potentially lower your score. Therefore, even if you no longer use these older accounts frequently, it's wise to keep them open and active with occasional small purchases that you pay off immediately. This strategy helps maintain a longer average credit history, which can be advantageous for your credit score over time. If you want to unlock even more money hacks, smash that subscribe button and join the crew. Let's build credit greatness together.